merger shall enable HDFC Bank to build up its housing loan portfolio. So largely, these are the comments coming out of HDFC's annual report.
All right, let's move on and welcome our special guest on the show. Sameer Baisiwala of Morgan Stanley is joining us on the sidelines of their annual conference. Sameer, good to see you after a long time. Hope you're doing well. You must be listening to my colleague's commentary picked up from annual report of HDFC. So let's start by understanding your thoughts on the realty space. We'll come to pharma subsequently. It appears that the affordability has been improving for the country in many years, and volumes for most of the regions we look at have come very nicely. What are you thinking of the health of realty sector right now?
Yeah, thank you for having me over here, and good afternoon, Ajay. So in realty sector, I would say that the residential is on a good recovery path. We are about 3 quarters already into this recovery. As you know, we were facing a fair bit of downturn over the last 5 years or 5 to 6 years. Property prices were flat. Volumes were actually down almost 25% over the whole of 5 years versus the preceding 5 years. So there's a lot of pent-up demand in addition to all the other factors that were being said by the previous speaker. So that all the right ingredients for volume recovery are in place, and we should see a few more quarters of this growth as we go forward. Second point I would highlight here is the price increases. The bigger challenge for the sector is the input cost inflation. So all of this is moving up various raw materials, labor costs, etc. So the developers have started to take price increases, roughly about mid-single digit, to protect their margins. So that's the second important theme that you're going to see over the next few quarters. And the final point I would say here is that the companies have done well to actually maintain and improve their balance sheets over the last 3-4 years. And therefore, we should see a new project acquisition cycle over the next few quarters.
Sameer, I was asking you about the drivers for both the sides of the real estate pocket. One category which derives its fortunes mostly from the IT-related workforce in South. The other one, more of financial market related, or in fact a good mix, the Bombay-based developers, the Lodhas, the Oberois, the Godrej properties of the world. How are you looking at the valuations of these two pockets of realty players and the quality of their balance sheets right now?
Yeah, sure. So balance sheet first. And I would say, over last 3 years, as I was making the previous point, that the companies have taken a lot of steps to deleverage, and quite significantly so. It has come about through internal accruals, it's come through sale of assets, it's come through equity placement. And today, when you look at their balance sheets, they're in a pretty good state. And second point here is, while the operating cash flows are actually on the rise, so a good confluence to have, and we should see the benefit of this translating into higher capex spend and new project acquisitions. That's one. And the second point you mentioned about the interplay between, say, South India player versus, say, a financial capital Mumbai players. I would say that where we are today in this recovery mode, it's a very pervasive, it's a very broad-based recovery. It's not only about most of the metro cities, even tier 1 cities that we're seeing this recovery. It is various micro markets within each of these cities, and then it's across the ticket sizes, whether it's low income, mid income, or luxury or premium products that you have. So at this point, I wouldn't make too much distinction between one versus the other. I think it's a fairly broad-based one.
Sameer, how's the appetite for realty plays among the institutional clients you speak to? All of these factors that you told us earlier, is there willingness to load up and what exactly are their current positioning on this sector in the institutional positioning, the clients you speak to?
Yeah, absolutely. See, the investability of the sector was very low, say 3 years back or 4 years back. Their representation on the capital market was very shallow. I would say under 2% of the overall, market. However, over last 3 to 4 years, as we have seen new listings, most notably new IPOs, both developer side and REIT side, and also just the way these stocks have moved up, I would say that now they've become fairly sizable, about $40 to $50 billion market cap to really play around with. So there is a bit more investability in the sector. So that's the good news. And second point here is that, and given this fact and the fact that business models are looking more robust, sponsorship is much better than what we had seen a decade back. And C is this current property cycle. I think all of them are making this to be a relevant sector, a sector that people are looking at fairly positively.
Right. Sameer, let's shift focus and talk about the other space which we look at very closely, and that is the pharma space. Let's start with hospitals and diagnostics. After a very good run during the COVID and even after that, there have been some amount of value destruction in many of the diagnostic stocks. Even hospitals are off highs. How are you analyzing the valuations they are trading at right now versus the prospects, the earnings prospect, the value unlocking prospect in some of them? Some promoters have indicated value unlocking. How do you see that space, the diagnostic infrastructure, hospital, that kind of basket of stocks?
Yeah, so on the healthcare services side, I think India is very underpenetrated, and we have a pretty good long growth runway ahead of us. And typically, the sector should grow at 1.5 to 2 times nominal GDP growth. So that gives you some sort of a play over there. Second is diagnostic first. So that's an asset-light business model. And what India traditionally had was fairly fragmented market, and a lot of even the big players were regional in nature, whether it was North India or West India, etc. And now time has come that post the listing, post business having scaled up, balance sheets being strong, that they become pan-India players. So India needs, say, 3 to 5 pan-India brands, with a trusted, track record of testing, of accuracy, great digital play. And that's the story that is unfolding in front of us here. But what has hurt the sector is the competitive intensity, and we have seen hospital chains diversifying into third-party, retail diagnostics. We have seen e-pharmacy players getting into this space. We have seen some pharma companies getting into this, and that's kind of made this very competitive market. So in the long term template that I just said, there's a short-term pressure which these guys are going through, and that kind of translates into lower pricing power, and therefore we have seen a deep correction on the stock market. So I think this is a passing phase, and finally we would see some of these regional players become fairly dominant and large pan-India players. It's going to take some time. On the hospital side, again, I think the largest ones had done a fair bit of capex 3 or 4 years back. The balance sheets were stretched. The new hospitals were making losses, and then you fast forward them to today, and things have completely dramatically changed. Balance sheets are in a great shape. The business has scaled up. All of these new capacities have turned profitable, and so therefore you have seen these companies do very well. At the same time, they also have diversification into pharmacy business, and they're adding a new layer, which is the online outpatient services. most notably e-pharmacy. So I think this is the journey that hospitals have had so far. And we expect this momentum in EBITDA growth to continue for the foreseeable future.
Sameer, how are you analyzing, the competitive landscape in US generic space? Some of the companies are again talking about pricing pressures starting to emerge, which was an issue a couple of years back. Then it had abated. When we analyze the Q4 earnings of many of the top 4 or 5 companies, there have been instances which show that US growth is actually not that great. How are you analyzing those factors?
You're absolutely spot on that US business is going through pressure. I would just break this business into 2 parts. One is the plain vanilla part of the business, which is mostly oral solids. And second is getting into more complex generics. And oral solid is a very, very tough business at the moment. And they continue to see fair bit of pricing pressure. And that's coming from competitive intensity. There are still more suppliers per molecule in the US market, which keeps pulling the prices down. So you can have your number anywhere from mid-single digit to high single. And some of the companies which have a product concentration are even seeing early double-digit sort of price erosion. And that remains a fair bit of a tough part of the business. Second is the complex generics, which is higher hanging fruits. And those are very difficult to get to. But the companies who are able to get to them, which are complex injectables, inhalers, biosimilars, I put specialty also in that basket. So companies which are able to, break the code for that part of the business are actually doing very well. And so therefore you have to be in the right areas to really do well in US. But overall, you're right that the business is going through some tough time, and I don't see this getting any better anytime soon.
Sameer, what do you have to say about the area of the market, the pharma space, which is Pharma API? They have more mid-cap kind of companies, but few large-cap monopolistic kind of businesses also in Pharma API seem to have entered a difficult time. Markets are compressing the valuations. How do you see the margin pressure related issues and the top line visibility of some of these Pharma API plays now?
So see, API is really the raw material, is the active ingredient, which is the potent part of your medicine finally. And I think it's a very strategic part of the whole value chain. And the way to really do well over here is to create moat around the business. So the companies which are able to gain global leadership by virtue of their scale and cost, they tend to do well. But at the same time, this is a B2B business. And this is, I would say, to some extent, a commodity business because there can be multiple players per product. So therefore, you do see some products go through the life cycle. And whenever there is, whenever they are on a downturn, those companies do not end up doing well, during that period. So really, the trick here is really to dominate few molecules, few categories, and that's how you protect.
Talking about parts of the healthcare and pharma sector and, of course, real estate. Time for a